right, let's talk about US and China. Listen, I was just in China a couple of weeks ago, and I was in a meeting with Lighthouser in D.C. a week or two before that. You know, we need a solution to this. There have been some trade disparities between the countries, but the US and China account for over 40% of global GDP. Nominal GDP is about $70 trillion. US and China combined are $30 trillion. We can't have a trade war. It will have a devastating effect to the global economy. That doesn't mean there can't be changes to the way the trade agreements have been written, and I think that's what the negotiators are figuring out.
What did you learn from Ambassador Lighthizer? Do you think we're back to square one, or are we close?
This was, let's see, this was probably 5 or 6 weeks ago. You know, it's a process. There's not going to be an arrival. It's like the kid in the back seat of the car. Are we there yet? Are we there yet? Yeah, now we're here. No, it doesn't work that way. This is going to go on, these discussions, I think, for a decade. This is a resetting of a relationship with what is now the second largest economy in the world. China's a $12 trillion economy with all of its trading partners. So this is not something that's going to be solved by a meeting with President Xi and President Trump at the G20 meeting. It's a resetting. There will be many steps, and I think everybody understands that.
Is it fair to say that the US economy has been relatively resilient so far in the face of that, and do you expect that to continue?
The economy has been resilient. The markets have been much more fragile. You know, the markets don't do well with uncertainty, and this is a cloud of uncertainty. So, yeah, the economy is resilient for a good reason. The U.S. economy, you know, maybe I'm an outlier on this, but the U.S. economy is actually in pretty good shape. You have unemployment under 3%, under 4%. You've had increasing worker participation in the workforce. There's very modest inflation. All the states and municipalities that were supposed to be in financial trouble a decade ago, it didn't turn out that way. U.S. economy is doing fine. This could derail it, but it hasn't yet.
So given the strength or relative strength of the U.S. economy, are you surprised at the level of the pivot that we've seen from the Federal Reserve in its rhetoric over the last 6 months, hikes in December and the rhetoric we've had since then?
Well, the Fed's in a tough place because the Fed's job obviously is safety and soundness and overall monetary stability. You know, when uncertainties rise to a big enough level, it does in fact affect how consumers behave. It does affect how corporate CEOs invest behind their companies. And when that is going on with this level of uncertainty, if you see it slowing, the question for the Fed is, when do I preempt? Now, my personal view is you be very aggressive on the way up in raising rates so that you're stopping what could be an asset bubble at some point. I personally would be more conservative in cutting rates because I don't think you want to use your firepower too early.